Now, the final topic I'm going to talk about is cryptocurrencies, which are currently all the rage and pervasive through whoever you talk to, whether it be my brother, my next door neighbor, whomever you talk to, they're all talking about cryptocurrencies. It's all over the media, newspapers. My mom even sent me a link the other day about some cryptocurrency. So everyone's talking about it. So we felt that it was prudent to address it. So what we've displayed here on the left is essentially the way the system for cryptocurrencies and specifically Bitcoin works. I'm not going to attempt to walk everybody through this, walk everyone through what this means, because it took someone on our team 45 minutes to explain this chart to me. And the biggest thing to take away from this is that there's many different players. It's convoluted, it's opaque, and there's a lot of moving parts. And when you look to invest people's money, your own money, there's a concept of staying within your circle of confidence. And if you stay within your circle of confidence, it's okay to say no. No one will ever get upset if you say no. If you say yes and you're not 100% certain about it and something goes wrong, that's where you get into trouble. So given the opaque nature of Bitcoin and cryptocurrencies, we would advise to take a breather from it, given the opaque nature of the asset. Now, there's other tangible reasons why we would have concerns to consider about Bitcoin and really all cryptocurrencies. Is four main reasons. Number one, the asset kicks off no cash flow. So if you're looking to buy a business or buy a piece of real estate, you value that based on the cash flows that the entity is kicking off to you. Because at the end of the day, if you buy it for a certain price, there's a quantifiable value you can put to say, okay, I bought it at a certain price. I know within X amount of years, I'm going to get a return of my money. And then after that, I'm going to get a return on my money. With cryptocurrencies, there is no cash flow. So it's more based on emotions. And we've seen this throughout history, whether it be tulip bulbs or even beanie babies. These things that are based on people's emotions, you've just seen a history of things going up and then coming down based on people's emotions. The second thing is that the irony of cryptocurrencies is that they're not sustainable whatsoever. They take a lot of energy to mine the cryptocurrencies. If you computed it on just the US consumption, it takes up about 2% of the US's energy consumption. And to gain a little bit more perspective on that, if you look at a smaller country like the UK, it consumes about 31% of the electricity generated in the UK. There's also slow transactional adoption, where people aren't really using it as a currency. They're really using it as a speculative investment tool. So no one's really using it as a currency. If anything, you've seen the US have some chatter about cryptocurrency and its use in the US. And you've actually seen recently China actually act on it. And let's just say you thought it was a good investment idea. The last part is there's limited investment structures, the way to even invest in it. The main vehicle to use to invest in it is actually being priced at 40% higher than the underlying value or what people are pricing Bitcoin in the marketplace. So there's no really good investment structure for Bitcoin or cryptocurrencies at this time.